As the debate grows over the Republicans' health care bill, Bloomberg finance reporter Ben Steverman has been looking at how the GOP proposal may give a big boost to the investing community. Let's talk about this, because they obviously have to fund whatever it is they're going to change in health care. Health care had to be funded the first time around. The Affordable Care Act had to be funded. Now this one has to. And largely that is going to come, at least in some extent, with taxes.
Yeah, so the Obamacare bill, when it was passed, had all these revenue raisers in them. And one of them was a very unique tax. It's a net investment income tax. And it's basically designed to catch as much revenue as it can from investors with this 3.8% tax on anything investors get, from capital gains to dividends to royalties to rental income. Gets it all. But it's only paid by people really at the very top of this economic spectrum, over $200,000 in income.
Okay.
So what happens this time around with what the Republicans have proposed?
So what they want to do is they want to get rid of that net investment income tax and go back to the previous system of basically not having it there. And they're also proposing some other tax cuts, like they want to get rid of a tax on tanning salons and a tax on the medical device tax that has gotten a lot of attention. But this is something that investors, especially if they're really in the top 1%, could really start to feel if this repeal actually happens, and we'll see if it does. Okay,
so we've got this tax that they're going to draw back. These were essentially the tanning salon tax, the net investment income tax. These are things that were kind of peppered throughout to get the bill done. Do we know sort of what else Republicans are looking at? Because obviously, no matter what they're replaced with, it's not going to be free. It's not going to come free of charge. What are going to be the taxes or the reform taxes that are going to support it in some way?
Well, I think the Trump administration, the Republicans, have a lot of problems looking for revenue, because obviously we're not just talking about this tax reform, we're also talking about an income tax changes and corporate tax reforms that Trump has also proposed. We don't know the details of those either, but at the end of the day, there's going to be either huge cuts in government spending and in huge cuts in access to health care, or they're just going to have to raise these taxes or roll back some of the proposals that they've made.
I want to dig into this net investment income tax a little bit more here. Was this something that the Republicans or President Trump had promised to repeal when he was campaigning? Is this something that gathered a lot of momentum?
I think it's something that I don't think Trump ever talked about it, but it's something that's a little bit annoying to people that are in sort of the top 1%, because it's very hard to avoid and very hard to evade. And it's been one of these things about Obamacare that has always rankled people, especially conservatives, that they have this tax. It basically just
it's just an extra tax
on top of your capital gains, on top of any other taxes you're paying on your investments. You have to pay this 3.8%.
And the real sort of effect, we've got a chart in the story on the Bloomberg that kind of looks at how much that tax translates into based on what you make. Even when you start out with the top 1%, you draw that line around 200 grand a year. It's still not a huge deal, but it does start to add up when you're making, $3-4 million bucks. It gets to be a solid little chunk of change.
Yeah. I mean, I think for the top 0.01%, we're talking about an average hit of about $165,000 a year. So this is significant revenue. It's about $160 billion over the next 10 years, comes from just this one tax alone. And then there's another maybe $600 billion of tax cuts that are also on the table in this Obamacare repeal, which are like the device tax and the tanning salon tax.